Welcome back, folks. In this video, I'm gonna show you how to get a confirmation from your trading analysis. If you remember, I talked about the simplistic approach to every market where I show you look for your opportunity below a 50%, basically below an equilibrium level or above. That is basically looking for your opportunity around discount level and around premium level. Now, if you recall, I talk about how you need a confirmation for you to trade from these particular levels, because if you do not have this confirmation, you cannot be sure if you want to take a position from a particular level or you want to move to the sideline. Because you have to know, you cannot know definitely 100% sure, but you can have at least 80% to 85% that this is likely to hold. And that is basically you having confirmation backing your analysis, right? So let's really not waste time here. Let's go straight to the chart and let's see what we can use as example. What I love to do every week, this is a 1 minute time frame. Okay, so what I love to do is every week before the week opens, I put on my vertical line from Sunday opening price. Let's see, Sunday, Monday, Tuesday, Wednesday, Thursday. There's always for Friday. I just didn't add it because I just need to just look at Friday without really putting it here. Anyways, then the second thing I do is to put on Sunday opening price. There are two things I will talk today, and one of it is about the Sunday opening price, and the other one is you trading from your confirmation level. Now, this Sunday opening price is very important. It's basically, if you understand power of three, whereby you accumulate, manipulate, distribute. This is basically it on a weekly perspective. So, but you only want to have a Sunday opening price up to Thursday. There is a reason for that, and I'll come back to that. Now, once you have a price on a Thursday or on a Sunday, if you are, say, bearish for the week, you want to see price trade above the Sunday opening price early on the week. Anyway, Monday, at most Tuesday, max Tuesday, it should be above the Sunday opening price. If you are bearish for the week, you don't want to really be around above the below the Sunday opening price on a Wednesday. That is basically price telling you you're probably wrong, or this is not a week you want to trade. So if you are bearish for the week, you want to see price to be above the Sunday opening price anywhere Monday, late Monday, early Tuesday, or the whole of Tuesday. You just want to see price above Sunday opening price between Monday to Tuesday, because basically when you're bearish for the week, 77% of the time Tuesday from high of the week. So you want to be around that level Sunday. Now back to having the Sunday opening price up to Thursday. Why I said this, because once you have a Sunday opening price up to Thursday, there is a reason. And the reason is, if price should be say you are bearish, let's say you are bearish for the week, according to you, your analysis. Okay. Yes, you might be right, and you can also be wrong at the same time. Now, let's say price and trade here. Let's say price started driving higher. Now, this is Thursday, and let's say price was delivering lower. And on Thursday, price trades above, because if you are bearish for the week, it needs to be it needs to be below the Sunday opening price for you to keep looking for lower prices. Now, as you can see, when a Thursday was below, Friday was below. This is what you want to see, and you then keep looking for lower prices. But if on a Thursday, this is specific, it is specific. If on Thursday, say on Wednesday price was below the Sunday price, and on Thursday price trades above the Sunday opening price, that indicates a reversal. If you are going short, if you have been bearish for the week, you immediately want to change your bias, because it's a reversal. Price is indicating it is reversing. And I think an example of this, I think, was last week. I think I saw something like that. I don't know, but is it this or Euro USD? Let's quickly just go back. I think suppose it should be, yeah, I think this is it. So this is last week. This is Sunday opening price. Right here. Right there. So you can see this is for the week. You can see Wednesday, this is example. You can see how Wednesday were below it, and on Thursday went above. So if you are looking to go short, there are people that might say, okay, they want to use this level to go short, for example, but that is really bad because price is indicating a reversal. You can see how price trades above, come back, take out this low, and deliver higher. That is a reversal high of the week forming on Thursday, Friday, basically. So this is the example I want to show you. So that is it. So you want to have your Sunday opening price up to Thursday. Price should not trade above the Sunday opening price on Thursday. If you're looking for bearish markets, or you're looking for bullish, you don't want to see price go below that on a Thursday. This is very, very specific. Moving on. Now, down to confirmation. You've made your analysis. You've done everything. You say prices should be at above 50% or below 50%. You've done all that. Price is now at a particular PDRA, let's say a fair value gap on a higher time frame. Now, once you've done this, you don't want to take a trade right away, except you just want to you can do that, but that's you basically increasing more of your risk, because you don't know if it's going to hold or not. Now, what you really want to be doing is say, okay, if you have this, okay, what should I look for price for me to be convinced that we are going to deliver to my direction? So you need something to convince you, and that's basically a confirmation. All right. So if you have a price, say at this level, and let's say this level, let's go down to for our time frame. Let's see if we can have something to look for. Okay, let's see. This is a fair value gap, and we have price coming to this level. Now, price has traded to this fair value gap. Now that it has done that, the question is to know now, is this fair value gap going to hold? How can I know it's going to hold? This is where confirmation comes in. But you see, confirmation comes in depend on the type of time frame you are analyzing from, okay, and the time frame you are using for confirmation. You need to have this time frame and alignment. You need to get it right. If you're looking at a PDRA, say a fair value gap, your analysis, you are doing it from a 4-hour time frame perspective, then your confirmation needs to be on the 15-minute time frame perspective. If you are looking to analyze on a 1-hour time frame, then your confirmation should be on a 5-minute time frame. All right. So this is a 4-hour. So which means now we are going straight down to what? A 15-minute time frame to see if we can get what? Any confirmation for price. Now, there are different ways you go to do your confirmation. And one way to do that, which this is what I'm going to recommend. I'm not going to share everything with you, but one way of doing that is to say, okay, now that we have price at this level, we want to see price break structure. We want to see price take out a short-term low. Price from this low, we want to see price take it out. We want to see price take out a low. Okay, at least 2 times. All right. Now, the confirmation you are looking for next is to see price take out a short-term high. You want to see price, take out a high. So, once price go to this level, it's forming a high. So we have price. You notice it's forming a lower high, a lower low, lower high, lower low, lower high. Now, what you want to look for your confirmation is that you want to see price suddenly start driving higher, take out a short-term high, and then displace. As it does that, that is your confirmation, and then you look to trade maybe from a fair value gap and then a breaker and deliver lower prices. And you can see in this case, you will see that we had price taking out the short-term high on Friday, but didn't give you an opportunity to trade from. So the people that normally have the pending order at this level and just stop loss above and hold, it's like that. So from a price at a PDRA, the first short-term high that formed, okay, we have a high, we have a low, we have a high, we have a low. So you can start from using the second high, uh, lower high that was created. You can start from there. There are times that price even deeper to the first um, lower high that was formed. But for a starter, you will use the second. So we have this price at this level, first short-term high, low, second. This right here, you start from there, all right? Let's look at another example again. Say, let's look at price. Okay, let's look at this level right here because we're looking at price last week from here. So let's say we have this family guy, we have this on the block, we have what we're seeing over here. Now we have this. Now we're anticipating that price should deliver lower from this level. Now, how can we know the price is going to deliver from that level? What do I tell you? We want to see? We want to see price from this level, right? We want to see price from a lower high. This is the first drop. Price immediately took it out. So we look at price again from this level. Keep looking at price. As long as it's still in this level, we want to see the same thing that we saw in the previous analysis we did. So we have price again drop from the first lower high, because had price stayed in this level and drop, then come back to take it. But the moment it's supposed to form a second lower high, it failed to do that and instead take out all this high, then you cancel out all this and you start again over from this place. Unless price continue to go higher, as long as it's in this level, then you are likely to look for a confirmation on this level. If you notice price is consolidating, that is also price telling you that it wants to drive it up. So this is price consolidating, but that will be topic for another time. Okay, how consolidation, that will be a wonderful topic. I talked about that in my previous. There's a video for that actually. I don't have to go over that. So the moment price supposed to form its second lower high after price drop here, we have the first. We are supposed to have the second, but look at how price sweep it up. So now you start looking at price from this level again. As long, remember, as long as it is in this PDRA which you marked. So we have price forming now. The first lower low, lower high, lower low. So this is the first lower high, lower low, lower high, lower low. So you want to see price sweep out the second lower low and give a displacement. Okay, you want to see price take it out and drop. So we notice we have price take it out, drop, forming a fair value gap right there. And you can see how price start going lower. That is it. So you go back to your chart and try this. Go to any market and you will find this. You have Sunday opening price. Notice how price expected. That is a topic also. But right now, you want to start with this. So you want to just mark a random PD array, mark a random level, go down to it, go to your 4-hour time frame, mark a random level that you think price should hold from, go down to a 15-minute time frame and look for this. And you'll be amazed at how this thing is holding. So I hope you find this video to be very insightful, and I will see you in another video. Safe.